everyone, welcome back to this week weekly market update. As usual, let's see what happened for last week. Very exciting. Last Friday, very exciting. Or perhaps from Thursday onwards, very exciting because market has been dropping. Yes, you might be thinking that I'm rubbing in your wounds if let's say you are the long-term investor. But the thing is that we have actually highlighted to you that uh, I don't think the market will be as like what previous year that it will continue to go up. All right, so we will see that we are right now at a high inflation rate. We are at a 50 basis point on the Fed hike, on the Fed rate hike on the table. So all these things, right, and also the QE going to take away the free money, right? All these things actually bring the economy to slow down. Definitely, it will somehow affect your portfolio unless you know how to hedge your portfolio correctly and smartly as well. All right, so without further ado, let's see what happened on last week market, especially on last Friday. We can see that last Friday, Dow plunged more than 900 points, worst day since 2020. It's fall for a 4 straight week. All right, so before we go into, just straight away jump to the chart itself and take a look. So this is what happened on the day chart. Okay, as you can see, which I mentioned previously, in Feb right now, April is almost 2 months. All right, where are we in Feb? We are somewhere here, right? Correct or not? We are somewhere here in Feb. Okay, so I don't have the crystal ball, but I mentioned that just to take note, 34, 35, 35.6K. These three level is very crucial. All right, it's very crucial. Okay, first, so what we can see that the market tried to break out from the descending support. All right, and then it's being resisted by the 35,000. It break below. Right now, once it break above the 35,000, the next crucial level to see that it must take over is the 35,600, whereby we can clearly see from the chart that it's being resisted. This is a day chart. It tried to went high. All right, if you go zoom in right on Thursday itself, it tried to went high, and then before it able to reach 35,600, 35,600, it came down. On Friday itself, it came even worse. Of course, what happened to the market? What causes the market to come down? Definitely, there's some news. All right, there's some noise out there. So let's see what happened. So we see that a lot of shares, all drops. I think mainly, right, firstly, company reporting disappointing quarterly result led to the market decline on Friday. Firstly, we know that what happened on Thursday itself. Thursday, if let's say you are following the earnings reports, right, you should know that the big jump down is actually on Netflix. Correct? Now, it's actually on Netflix. Netflix gap down 30+% because of losing of 200,000 subscriber per, I think, last quarter, Q1. So this is a very bad news for Netflix. All the bank analysts all cut their ratings on Netflix, bring down the target price on Netflix, and Netflix just crashed on Thursday itself. So a lot of people is trying to bottom pick on Netflix itself. Just be careful, don't get burned. All right, don't get burned. Next thing, Tesla have announced good earnings, but where is Tesla standing right now? Let's take a look. All right, so why I keep mentioning on these two tech company, because of the coming weeks. So what's so big deal on coming weeks? Coming week is actually a technology earnings report. Do take note, it's a technology earnings report. So you see on Thursday, right, Tesla report good earning, good sales, whatever good everything good. But it open gap up and it tried to push higher, no strength. It came down with the overall market. All right, it came down with the overall market. So on Friday, the market also closed below the previous day. All right, we can see that it might be sideways, stagnant, or whichever. But if let's say on this coming week, if the overall market is going to be bearish again, all right, if going to be bearish again, and with all the big tech stock earnings reports announcing starting on Tuesday with Microsoft, Google, Visa, and then followed by Thursday, Wednesday, Facebook, all right, the metaverse, PayPal, it break below, got the uh sanctions. I get the Russia wars things. All right, and I guess Thursday. Yes, Thursday is Apple, Amazon, Mastercard. All right, this is all the big tech earnings report is coming up on this week. So if you are holding, if you are heavily on technology, just be aware. All right, just be aware. So this is what actually caused the market to turn sour. And then not only on that, I guess it's because of last Thursday or Friday. I think our gentleman's Powell, all right, he have comment a lot of things in the market. He's being hawkish on the 50 basis point rate hike. All right, so like I say, it's on the table. It's going to hike. Uh, the US 10-year Treasury yield rate actually spiked up close to 3%. I think above 3% right now. And then if this hike is, I think, is coming in May. All right, it's coming in May. So we can see that this is what we got to be aware and take note of. All right, so central bank is being hawkish itself. All right, so this is what I have to take note. And you also say that Powell did note that there may be benefit to front loading hike. All right, and being aggressive early, this to set up for the potential cut later in the economy stumble. So what does this mean? Because you must understand that there isn't much bullet for Fed to play on if let's say their rate remain that low. Alright, if let's say their rate remain 25 basis point, 0 basis point, if the inflation rate is going to spike up, which will, based on the commodity side, is actually at the high side, based on the oil is at the high side. Alright, so they need to have bullets on hand to cut when the market is not turning good. So they need to hike as early as possible. All right, and another myth that we will be going through perhaps should be we are close to the day of May, and one famous sentence, sell in May and go away. Correct or not? So this is what all coincide together. All right, so we can see that the bond actually 5 years use treasury hike to 3%. So what's next? We shall see on the chart later. Okay, so let's move on. Netflix and Facebook given up most of their last few years' gains since tech November peak. So if you are on the technology side, just be aware, not just on tech side, I guess on the Chinese ADR, alright, Chinese ADR company, I gotta be aware like Baba, everything. So just have to watch out on that as well, alright? So take note what happened to Netflix and Meta, which is Facebook. Overall, 3 years right now, almost back to zero. Netflix below 50. Okay, so let's move on. On the other hand, on our local market, Singapore is moving closer towards pre-pandemic living. All right, so what it means, we are going to fully open up. This is good to the news itself. Good to the economy, which I have been mentioning, like certain counter like SIA Engineering, SATS, SATS, SIA, this kind of company like Gentings, going to open up everything. So just take note, especially for the ETF, it's really good. Next thing, all right. So this is what happened on the stock market. Is ahead. Next week, things to watch out. Like I say, the big earnings of the tech company itself. Just to watch out lah. That is, I think, the biggest news on next week. All right. So earnings calendar, which I mentioned just now. All right, all the big tech company, just be aware. So let's come to the chart itself. Okay, so for the chart, right, we can see this is Dow Jones. Um, Dow Jones, like I mentioned just now. Sorry, give me. Okay, so for Dow Jones itself, right, we can see that right now we actually break the 34,000. If let's say, because it's a very, very bearish candlestick, if this candlestick continue next week, all right, it might have some pullback, or otherwise, if that say the sentiment is turned really sour, okay, it will drop below to our next support level. Where is it? 32,000. Yes, it might be a huge gap, but I don't see any midterm support. Maybe at 33,000, just a whole raw figure, or otherwise, this is what we will see. I did draw the arrow previously. This is what I will see. Okay, so it actually spike up, a false breakout, come down. Okay, so this is what I'm looking at. So let's take a look at Nasdaq. For Nasdaq, okay, so for Nasdaq, this is what I mentioned previously. We are well resisted by the descending triangle. I mean the descending channel. All right, descending support line are basically the resistance. So right now, which I mentioned, watch out on this three level again. Right, always give this three level. Okay, go and buy 4D. All right, so this is what I mentioned last week. We might be coming down to this circuit area. True or not? and eventually it came down like this circle just moved. It came down, correct? So this is what we are looking at. So where are we looking at? 12,000. This is March 20. So on 13 March, I also mentioned, watch out for 12,500. If it break, we will go to 11,500. Okay, 11,500, which is on the 50% Fibonacci. This layer. All right, this level just to watch out. Okay, but ultimately Nasdaq is still strong first because the first support 12,500 has not taken off. All right, so this will really depend on next week earnings. Come on. All right, so once it break, don't insist to hold in. It might just come one way down to here. All right, so this is what we are watching on Nasdaq for next week. As you can see, some certain chart I didn't really draw because I'm just waiting for the price to happen to realize true or not. There's no point weekly to really update unless there's new counter lah. Alright, so let's recap. Calf, who is still holding this baby of mine, which I mentioned in my private Telegram group. So what happens? I say hold on. My first target 40. Where's the oh no notes? Okay, so sorry. So my first target is 44, 45. It eventually came very close. Due to the overall market came down, it closed Friday on the negative side as well. So ultimately, we are still on the short-term uptrend. Once it break this resistance, we might see the, the breakout of the next bull lah. All right, so this is on the graph itself. So next few counter, just to recap, AMD I mentioned last week, correct? 16 April last week. I did redraw. What did I say? On the weekly chart basis, we know that it break the $100 mark. True or not? It break the $100 mark with a candlestick close way below it. So the next subsequent candle is definitely below lah. Can we see that? All right. So this is what happens. The first target support is at 85. Next support after 85, we are looking at 72. With this pessimistic view, sourish, bearish sentiments in the market, I think 72 is not that far off. Alright, 72 is not that far off. High chance maybe next week we will be there. Alright, take note for AMD. This goes to all the chips maker like Nvidia. Nvidia. Alright, why? Nvidia have also break down. Alright, it also break down. 210 broke down. This is what I mentioned here last week. I think I mentioned it. Alright, so I say that you will reach 180. I told my friend you will reach 180. Coincide with this moving average 100 days. Once it break, just like AMD, this got to turn bearish again. So next target will be somewhere at 120. All right, next target will be a 120 support. There is a huge gap, but it takes time to work out lah. All right, cannot be one candle down to 130 perhaps, like what happened to Netflix. All right, so watch out for chips maker. All right, so for let's see what's next. Okay, so for coming up earnings, let's take a look of Visa. Okay, so this is what happened on Visa. This is the weekly chart. We can see that it's an uptrend. All right, it's an uptrend. Very obvious lah. It's an uptrend. But why right now we are taking a deeper look? Firstly, is because of the sensation in the Russia. So it does really affect Visa, Master, PayPal, this kind of big company. Definitely will affect their earnings, right? So what happened on the Visa? We can see that 3-week solid come down candle, but to be assured that it's turn bearish, to be assured it goes continue down, this is the first support level. We must watch out 190, coincide with the 50% Fibonacci. So where do I draw my Fibonacci, right? It's actually from the swing low since the pandemic, the COVID-19. So I draw from the March 20 to all the way high, 21, year 21, right? So this is how I draw my Fibo. I'm not going to get too way below lah because it's too historical price, right? So we look at intermediate first. Once break the 61.8 Fibo, we are looking at the next level of 190, which coincide with the 200-day moving average. So this depend on the earnings report coming up this week itself. But I'm more on the bearish, but if you want to play before the earnings report, just be careful. Don't get burned like Netflix. The moment it kept down 30+%, you're in deep trouble. True or not? So you can wait until the earnings come out if it's not performing well and the market have not run off. All right, what do I mean by have not run off? Meaning to say, right, if let's say the market, sorry, I'm finding some cursor. Okay, if let's say next week the candle opens something like that, all right, it opened below, it's not gap down, and the earning is not doing well, that you can short it. All right, you can short it. Of people who are more worried like Tesla, it may happen this kind of thing. All right, open up and then close lower. Okay, so either way, as long as it don't break this line, we are fine and we are more on the downside for Visa as well. All right, so this is what my outlook for Visa. Lastly, just a broader view. Let's see where is the fear factor for VIX at this point of time. So for fear factor, right, we can see that right now, okay, $20 to me is like below it, right, market will go up lah. Okay, below it, market will go up. Above it, market don't seems good. Okay, so we can see that since the global financial crisis, all right, the shoot up that is being supported. Market has been trending sideways over here, sideways. They break up, panic, sideways, doing good. After the pandemic, it shoot up. See that, right? So right now, after the pandemic, everyone start to, actually it's nothing new, nothing big. Vaccine come in, everything, and they start to pick up again. Why? Because of the inflation rate, cutting of the rate, the interest rate, hiking of the interest rate, cutting of the free easy money. So right now, last week, it actually maintained above the $20 mark. Right now, it broke up. So I'm waiting for VIX to come to here. I think high chance if let's say market continue go down, it's an inverse correlationship, right? So if let's say it show a sign of picking up, this will give you a sign that the overall market will come down. All right, so this is how we look at the fear in the market by using the VIX indicator. All right, so that's all for this week weekly market update. Not to go long into it, we will see you next week again. Remember to like and share my Facebook page and my YouTube link as well. Join my Telegram group if you want to have the immediate update in the market as well too. That's all, everyone. Have a good weekend. Bye bye.